Good morning, guys. This is Bathrobe Business. I'm Georgi Oganov. It is Wednesday, December 6th, 2023. I got my coffee. Let's jump into the news. So today is actually the first day in a couple of days. I feel like I have some good news stories. Like there's a lot going on in the economy. Last few days, I felt like there's not much going on, so I skipped one video. I only had a really short one yesterday, but today I feel like I have a nice beefy video for you guys. So let's start with the markets. Dow is up 97 points at 36,286. S&P is 45.93. Nasdaq is at 15,992. Oil is slightly down again at $71 a barrel. It seems to be falling week by week. Just last week it was still at 77. So that's really good. I do see gas prices all across the country falling as well, which is very good. Moving into winter, that's actually fantastic. Our favorite indicator, gold, is remaining at that 2040 mark. So as we've discussed, gold has been kind of on a rally, but it seems to have settled at a new baseline of $2,040. It is not noticeably dropping. Every time I go to check, it's remaining above that threshold. As we've talked about, I consider gold a thermometer on the economy. If gold is high, the economy is running at temperature, something unhealthy is happening. If gold is low, then the economy is healthy, there's no temperature, everything's going smoothly. So let's jump into the major stories. I'm going to start with unemployment, or I should say with employment, and payrolls. So I am going to read parts of this article as well because I think there's a lot of nuance to it. So private payrolls increased by 103,000 in November, below expectations. This is according to ADP. So I'm reading this article on CNBC. Private payrolls grew by 103,000 workers in November, below the downwardly revised 106,000 in October and the 128,000 Dow Jones estimate. So payrolls are down, unemployment is growing, supposedly. However, when you look at the unemployment numbers, there is still more than one job for every open position in the United States. So I don't see a greater unemployment number increasing. It's just that new payrolls and new jobs are not necessarily being created at the same pace that they were previously. The interesting part is, as we've talked about before in these videos, hospitality and leisure have been leading these growth numbers. But in this article, it talks about that. After leading job creation for almost the period since COVID hit, leisure and hospitality recorded a loss of 7,000 jobs. So not only is it not growing as a sector, it is actually slightly shrinking by 7,000 during this October period. So that's not a drastic number. That's not huge by any means, but it is something to show that the economy may be taking a slight turn. I think this article, again, is a little bit overhyping the scenario. It makes sense that job growth would slow over time, but it is interesting that it's happening specifically in hospitality and leisure, which was a sector that was driving this growth in jobs. I'm going to continue with this article. Along with the modest job growth came a 5.6% interest in annual pay, which ADP said is the smallest gain since June 2021. Job changers saw wage increases of 8.3%, making the premium for switching positions the lowest since ADP began tracking the data 3 years ago. And this is a very good indicator because most people's payrolls increase when they jump jobs. And the fact that the increases are happening at slower and slower paces isn't necessarily, it's bad for the worker, but isn't necessarily bad for the employer. So the interesting thing with this is, this is a big driver of inflation because people will switch jobs, their pay instantly increases, vacant positions have to match, and then this cycle kind of continues like dominoes. So this is actually a pretty strong indicator that if this number decreases, this 8.3% increase in job growth when you jump jobs, if this number decreases, this will be a powerful driver to reduce inflation. The next story almost counteracts everything I just said, because the next story is that there are signs that are pointing to a banner travel year in 2024. So travel is once again up. The International Air Transport Association expects the sector's new profits to reach $25.7 billion in 2024, a 2.7% net profit margin, a slight improvement from this year's upwardly revised projections. So even though this year has been record-breaking for travel, we're seeing another expected increase in 2024. Bookings are continuing. People are still expected to travel at record numbers. So even though hospitality and leisure seems to be a shrinking market, It's not affecting travel. Travel is going to continue. Travel is expected to be record-breaking in the next year. So it's definitely a mixed bag when you consider that one story seems to point in a direction of shrinkage, whereas the other is pointing to a sector of growth. So next story is about the Bank of England. I'm not going to get too into this just because I like to focus on U.S. news. I just think it's interesting that the Bank of England warns that higher rates have yet to come through to an already weak economy. So essentially what they're saying is, much like us, they have been increasing interest rates. Their economy is structured a little bit different. They don't really have fixed loans like we do. In fact, in the United States, we're pretty rare in the world in that we have fixed loans. So when we buy a house, we have a fixed mortgage. Most people do anyway, for 15 years, 20 years, 30 years, whatever the term of the loan is. Their loans tend to vary. If not entirely variable rate, then usually during periods like an ARM, where for the first 5 years it's going to be locked at the interest rate where you signed, or maybe the first 10, but then it gets readjusted according to the new interest rate. We're actually pretty fortunate in the United States that we don't have that. I think that's kind of terrible. I don't know, growing up in the United States, I would not be accustomed to that. That seems odd to me. Even in our business dealings, we have fixed rates in our business loans, minus things like credit lines, of course. But with major loans, equipment loans, business loans, we're always at fixed rates. But they're saying that the higher interest rates have yet to feed through the economy. So I think that's signaling that they're going to be continuing raising interest rates. Again, inflation is a global problem right now, so it makes sense that they're planning to raise rates again in the new year. Mortgage refinances in the United States have jumped 14% as rates fall to its lowest point since August. So at one point last month, we touched 8% on mortgage rates. It seems that currently refinance rates are closer to 7%. So a 14% jump is not small. I'm wondering, I could not find data on it. I'm suspecting that a lot of this is with developers and flippers, simply because they often tend to refinance post-reconstruction anyway. If you follow this sector at all, there's the BRRRR method where you buy, rehab, refinance, and then rent. And so a lot of times they're refinancing at the end of the reconstruction simply because they're pulling money out for their next deal. And it makes sense that if they've already purchased several homes in that time period of 8%, they're wanting to aggressively refinance as quickly as possible to 7%, because that's going to affect their rent and their profit margins. Last story is the weird one. Again, I don't like to focus outside of the United States, but I just think it's interesting because I think it does, to some extent, affect the United States economy. So Tesla, Elon Musk just can't seem to win. Tesla faces a Scandinavian revolt as the Danish dock workers join a Swedish strike. So this is a weird story because essentially when Elon Musk moved into Europe, specifically in this scenario, Sweden, they are heavily unionized. The unions pretty much run the show there. There's very little government intervention into payrolls, but the unions are pretty much the starting point for any new business. And Elon Musk never signed the union contracts, of course. He's very anti-union. He said this in his speech in his interview with Andrew Sorkin last week that garnered all that controversy. Again, it's a very interesting interview. I'd recommend you guys listen to it. I listened to it at work, just podcasting while I was working. And he says a lot in that interview. Everything that gets attention is, of course, the advertiser's FU statement. But there's a lot that he talks about. Whether you agree with him or not, I'm not pro or con Elon Musk. I'm simply just saying there's a lot of interesting stuff that he says besides the FU to the advertisers. But what he talks about is how very anti-union he is. And here in Europe, that's virtually unheard of. And so he never signed their workers' contract, their union contracts. And so IF Metal have been striking with Tesla for about 6 weeks. And the crazy thing is the strike is growing outside of just the automotive industry. So workers across a range of industries in Sweden, including the postal workers, painters, dock workers, and electricians, have joined into the strike. And now, here's the funny part. The post office is refusing to deliver Tesla license plates because he will not sign this agreement with the the mechanics in Sweden. And so Elon Musk says that he's going to deliver trucks to Denmark and then transport them into Sweden. But now the Denmark dock workers have joined the strike, so it's now an international strike. against Elon Musk. So they have joined the strike in solidarity that they will not accept Tesla's cars in order to deliver into Sweden. So it is a lot of pressure on him to sign. But here's the funny part. Apparently, the strike is incredibly small because if you start reading the article, you find out the contract is only between Tesla and 120 mechanics. So this isn't like the United States where the United Auto Workers are tens of thousands of people. This is just 120 people. And so this will show you how adamant Tesla is against unions, that they're not willing to sign a union agreement for 120 mechanics. This is probably pennies on the dollar. So this is where Elon Musk has chosen to plant his flag. As we know, he is very adamant about his positions, regardless of what the financial repercussions are. So it's a very funny article that over 120 people, it is now involved multiple sectors, multiple countries, where it probably would have cost a very minimal amount just to agree to the terms of the contract. That's the last story I have of the day. I'm going to head to work, so I hope you guys have a great day, and I will see you guys tomorrow. Take care.